video that I'm going to do for you. GDXY and GDX. So there's a lot here to look at, although there's no trades. So let's jump right into what's going on with GDXY. So remember, this fund really first trading day was 5/21, so it's got all of 3, 6, 7 trading days in the book, right? So 5 and 2. It's doing well. Interesting how, remember how funds can do well, even though it's a bullish bet, it's hanging in there, right? It started with a GDX at 36.93. GDX has come down, it's captured all its weeklies. So it's making money, it's collecting money, right? And its synthetics are out at 38. So it's not always the rapid rise. Just look at NVIDIA right now. It blows past its calls, right? And the fund managers are being, screamed at. Well, you should have written it higher. I mean, yeah. So just because, and then that's where all the negative Nellies come out on yieldmax and say, well, you should have owned the underlying, right? And again, you want to be bullish, slightly bullish, and you want it to move, but not just outrun the underlying, okay? And then here's another thing to do. So this is where I can help you. So when you get into these super bullish runs, then we'll see it in the charts, we'll see it demonstrated, we'll see breakouts. You want to maintain your shares so you collect your income. You'll still get income even if it blows past the weeklies, because they'll roll the calls, the synthetics, and they'll have some income. It's just you won't do as well as the underlying. So there's strategies, right? Maybe we go buy another fund that's 2 times long and doesn't pay any dividend and just pays you capital gain, right? It pays you the gains in the underlying stock at a 2 times rate because that stock is flying up. But maybe you don't want to just trade out of your fund. So there's all of these hedging strategies. I always bring that up for everybody. And I used a lot of these before there was a yieldmax around, right? I traded the 2000 to the 2010. I mean, it ran on until 2011. But I made a lot of money in gold and precious metals, miners, and silver, just writing it, selling puts, selling calls, buying calls. It was at the very tail end they introduced some multi-leverage. They had a 2x and a 3x, and Nugget first appeared, which is like a bullish, at that time it was 3x. And you didn't want to own it very long because it had rapid decay, right? You only, when you saw 10%, 8% daily increases where there were breakouts, you jump in that fund and you make a bunch of money, and then you get out of that fund because you sit and hold that fund. And even you're going to break even though the fund is higher than where you bought it, right? Through time decay because of the options they're using. There wasn't really a yieldmax income strategy at that time. So as a reminder, this is a blessing. I mean, we're entering a bull market in the precious metals miners that's going to last 7 or 8 years. And so if you get 50% average increase, which is my idea of a bullish market, it's going to be followed by dips and other things. So in your income fund, you just want to own that fund, get your income, and there's going to be times when you're capped, and then there's going to be where you maybe want to also own another instrument, And when I say 2 times, so you could go out and buy GDX, and when it runs, 8% in a day, 6% in a day, multiple days, it's going to run right by those 5% out of the money calls, right? This is a good problem to have. So you maybe want to buy a GDX like a Nugget that's 2 times GDX. So when GDX runs 6% in a day, that's the bearish one. Nugget runs 2x, so it runs 12%. So not only do you do better than own the underlying, you own that. But let's try to be somewhat predictive when those runs are going to happen, and when they start, move into those instruments and then move out of those instruments, but the whole time keep your position in your GDXY, right? So that's the kind of stuff I'm going to continue to show you guys, and I always say it again because there's going to be new subscribers. This is probably one of the most hated funds out there, right? Because people look at it and go, oh, gold's at an all-time high recently. Why would I want to be in the miners now? Well, duh. You want to be in the miners because they're reflecting gold at like 1,300, right? They're priced like gold's only 1,300 an ounce, and it's at, you know, high 23s. So as these quarters, the next quarter and the next quarter, they're going to produce huge, you know, the good miners, right? That don't have catastrophes, that the CFO is not cooking the books, and you know, the major players, not a discovery guy that hits another dry hole, right? I mean, there's going to be some 100-baggers there, but for every 100-bagger, there's 20 others that go broke, right? They're just, you know, they put gold or silver in the name of their company, and they own a moose pasture, right? There's no likelihood of gold or silver being found. So anyway, enough of my rant. I like to educate. I like to talk about that. So you know why I think this is an up-and-coming, super up-and-coming fund. Okay, so let's look at what they did. It went down almost $1, 36.10 to 35.19, down 2.52%. We went down less, right? Because we're not capped, right? Because we get in a better position now with a lower price. So we went to 1901, right? So let's go look. No calls were written, no shares were bought. Why do I say it's the most hated fund? Look at this. 150, jumped up 50,000 more shares. They won't show 1 or 2,000, right? They're going to show 25, the creation unit. So you'll never see another number till it's minimum of 225. So it's not to say no shares were bought or sold. So where do we set on the weeklies? Well, we look better now to keep all of our monies. So let's take a look at that. We've got weeklies. Look at this. We were only at 36, and we were just at 36.10. So we were already 10 cents over. So this is a blessing in disguise with 2 trading days, right? We want to stay under, and that was on 1,000, right? So we went from having, you know, this 34,000, we were going to have to buy it back at like 51. Now all of a sudden, we've captured almost 21,000 of the 34. So if we close out at 35.19, if we close out at 36 even or 35.99, we keep all that money, right? Now, there's a tiny portion here, 75 contracts at 35.50, right? But a lot less money involved, less than 10%, right? So that means like 2,800. Let's go look exactly at it, right? That's why I do these various spreadsheets and color code them and link them so that you can see this when I describe it. So this is all just what do they use for bankroll. How can you even do a fund? Remember, this is education. So the SEC says an ETF by definition can have more than 10% of its money in a single security. And yet, these are single stock ETFs. So how do they accomplish that? Well, they use a strategy of options. They never own the underlying, okay, for new subscribers coming in. So they take a lot of cash that people buy in, and they put it in all these treasuries and money markets. And these things are yielding 4.5%, 5%, whatever long-dated treasuries are paying, right? And this First American government money market's a good yielder too. So look at that. We got, you know, it's 95% of the money. I didn't add it, but pretty close. 96% of the money is in money market treasury. It's not in any stock, right? So then they buy options in a security, but they don't own the underlying security. So I'm not even sure that the options count against a single security, right? Because it's option. But by buying these options, they simulate being long the stock, right? Buy the call, sell the put. Each of those strategies. If I buy a call that says I'm betting it's going to rise, I only make money if it goes up. If I sell a put, I get to keep all that premium, and I do not want it to go past the strike price I chose. So I lose money if it goes past this 38 at 719, right? But what will happen is when it gets up there, they're going to roll this position. And sorry, that's not true. I made a mistake on that one. So on the put, they do not want it at expiration to be below 38, right? So the value, and they sold this, so they get to keep all that money that they sold, okay? And then they have a liability going forward. So right now, the stock is at, the GDX is at what, 35.10. So they would have to pay just on the difference of 38 and 35.10 is 290. But there's time premium involved, right? So that time decay, if we got to the end of the contract, they would have to pay $2.10 from, or $2.90, 38 minus 35.10, right? $2.90 times 1,075 times 100. So they would have to spend, you know, like 268,000. But they have a little bit of money here, even though that's all time premium, right? Because when you buy a call, you want it, it's only worth anything past $38. So what you want in a perfect world is you want this to be 40, 42, 44, 45, you owe nothing here, right? Anything above 38 or above, this is zero. And this at 45, you got a minimum of $7, right? So this becomes $7 at 45. You got no time premium left, but you got $7 against your strike price. So that's how that guy works. That's why it's considered a bullish bet. These weeklies are a way of trying to generate money. They're quasi-bullish, but they turn into bearish very quickly when they get run by. So what do I mean by that? So they go out and they sell a 36 call. They sell 1,000 contracts, and they collected 31 cents when they sold it, right? 1,000 times 100 times 0.31 is 31,000, okay? So then they track it on the weekly basis. What can they buy it back for? What can they buy it back? Well, logic dictates that as long as that stock is 36 or below, they don't owe anything on the call. Just like on the put, as long as it's 38 or below, they don't owe anything, right? But this one can turn in, if the stock ran to 42 in a week, then this goes up on the 1,075, and on this 1,000 they get killed, right? And if this thing goes to 45, they owe $9 a share above the 36. So that little 31 is a pittance in terms of what they have to use to buy it back. But a lot of times they're good at placing these, right? When they put them out and volatility, it moves up one day, pulls back, then they're making money on this time decay portion of these things. So it's yin and yang, right? You got a longer term strategy and you have a short term strategy. And if you can manage reasonable, 3 to 4 or 5% gains in a week, then you'll salvage most of this and this will go up, right? So we're not, excuse me. Choked on something I drank earlier. Okay, so that's how these work. Always take a chance to teach it as we go. So let's see what else we got here. So we got all our treasuries. We've got this is like a liability, but we have till 719, right? This is considered a loss. We're behind the 8 ball because we're under the 38. We want the put to get to 38. They both work off 38. We want the stock to get to 38. That means this is worthless. And then this is worthless. Well, hopefully we bought this less than we sold this for. But ideally, you want this above the 38. This goes to 0 and you start making money. So the other thing that I tracked is the shares outstanding, and then what is the net assets? What is all the treasuries and their accumulated interest? They update it daily. What are our synthetics, the trading price each day, and what's the trading price on these each day of the weeklies? And all that adds up and says, oh, this stock should be selling for $18.98. Well, the market doesn't always cooperate. We're 3 cents above fair value, right? What's known as NAV, net asset value. So, I don't read a lot into that. If this was 1910 and I want to buy it, I'm going to buy it, right? I don't try to pick it at a discount, but it's just another numeric, right, that means something. So here's what's been happening to us. I didn't move with these columns all over. We've been behind the 8-ball 263, then we went to 258, we dropped all the way down to 170, and today we dropped in price, so therefore our synthetic loss, it's a paper loss, is 268. Okay, so final piece you want to look at. Nothing happened. We didn't put a new trade on. It's been a number of days. That same number is reflected here, right? Because actually, this one's 35.9. Yeah, I did update these, but I didn't update this. So this is an accurate number, and now these are. This is how far underneath that synthetic. So let's go to payoff. Okay. So I've been hyping this, and I know some of you bought it. This isn't going to pay until July, so I think it gives us plenty of time to get in here. I don't see the gold stocks taking off probably till mid-June, but I think they got a run coming, and I think you'll see 38, I think you'll see 40, 42. I think in the fall, this it could even go by the end of August. This thing could be 46 or something. So I see a pretty bullish run. Hopefully it doesn't run past our weeklies and they see what's going on, but I may also give you guys some strategies for being long GDXY, which is Nugget or some other stuff that I mentioned in the beginning. So we'll have some strategies in place, but regardless, your NAV will go up and your payouts will go up in a bullish market like that. All right, so nothing to see here other than the 54,000 that we've collected. Little chance of running by that now. We could a tiny bit on that one that's 35.5, right? If in 2 days we could be 36 or 35.80, and that might cost us, but we're talking about a few thousand, 3,000 or 4,000 of the 34 might go away. Big deal, right? Where we're going to be able to build this, we've got 63 cents in our synthetic, right? And we got 27 cents in our short call. But again, they are not going to pay on June 5th declaration. I'd like to see this we'll get another week in here. We could get this thing up to, 40, 35, and then work a whole month. So in July, we get $1, $1.50 or something. That would be a massive win, because this has a pretty low IV now because gold stocks haven't really started to run and the market's bearish on them. Like, why would I buy something that, hasn't done much? Well, sometimes that's exactly what you should be buying, right? Something super undervalued that there are market forces in place to change that. So that's why I'm doing it. That's why I'm talking about it. I think it's one of the best opportunities in time. Hopefully it becomes a coney, although I'm still bullish into 2025. on the BTC oriented. I'll let you know if I change my mind on that. But on Coney and Misty, I'm still bullish for another 6 or 8 months. But you know, the markets will tell us if we need to change that. Okay, that's what I got for you. So Bruce out. Again, no financial advice. I'm not a financial advisor. Always seek your financial advisor when you're going to make financial decisions. Have a great day ahead, and good luck to everybody. Okay, Bruce out. Bye.